Good morning, folks. It's 8:02 a.m. Chicago time, 9:02 Eastern on Thursday, the 6th of April, 2017. Do I sound the same every morning with that introduction? I should change it up a little bit. I'm not here for entertainment, though. That's the thing. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance is pretty much unchanged. I'm showing strength across several products, but overall, comparing it in context with yesterday's action, the market is still where it was basically on Tuesday, especially the U.S. indices. The leader today again is crude oil. Crude oil took a hit yesterday after the inventory numbers came in strong. Came in strong, a nice move on that figure. It went from around 51.80 to about 51 very quickly. That was an interesting setup. And then the second strongest product on my list today is gold, $1,254.30 an ounce, up $5.8 or 0.5%, followed by the Russell, the S&P, Nasdaq, Dow, and the U.S. dollar. The only thing that's lagging today is the DAX. Again, the DAX has been scraping by. The DAX is almost unchanged, down 4.5 points. 4.5 points is less than one rotation in the DAX, so it could teeter into green territory very easily there. The Hang Seng is down 0.5%. The CAC 40 is up 18.21 points, and overall, it's not a very noisy overnight session. The Fed announced yesterday, in case you weren't here for the Fed minutes, the minutes showed that the Fed wants to start shrinking its balance sheet, and the market did not like that one bit. It's just rolled right over. And so we saw the sell-off yesterday. The Fed show the meeting minutes from yesterday show that the Fed wants to start normalizing its $4.5 trillion balance sheet, which ballooned as a result of the financial crisis. Fed members also noted stock prices were quite high. This is almost not as bad as the irrational exuberance comment from Alan Greenspan back in 99 or whatever, when I started trading, when the market just had a huge correction as the Fed chair announced that the market's just being irrationally high. Also, Tarullo, Fed's Tarullo also leaves the Board of Governors. So this follows the resignation yesterday by another FOMC member. Other than that, looking at this morning, we had several numbers in Europe and Japan. Japan consumer confidence came in strong, 43.9 versus 43.4. Germany's factory orders came in at 3.4. Falling short of the 4%. Swiss CPI came in 0.2 in line. The March challenger job cuts here in the U.S. came in at 43.3 versus 37. And the initial jobless claims came in stronger or better at 234,000 versus 250,000 expected. Continuing claims in line at 2.03. As far as what we're looking for today ahead, the calendar's fairly quiet as far as numbers, but there's a parade of speakers today. We're looking for natural gas at 10:30, and we've had last night we had Fed speaker Potter, we had ECB speaker ECB speaker Draghi speak at 3 a.m. New York time this morning. ECB Speaker Prate at 3:30. We had ECB Speaker Weideman at 5:40. ECB Speaker Constancio at 7:45 Eastern. Those are all in the past. At 9:30 this morning Eastern, right at the cash open, we get Fed Speaker Williams. In Frankfurt at 12:40 this afternoon Eastern, we get ECB Speaker Prate, and then at 1:15 we get ECB Speaker Constancio again. It's a Fed parade, like I said. Let's switch gears and look at what we've got as far as what was planned today versus what actually happened. I'm going to share some interesting things I observed yesterday in the order flow. For those who are looking at order flow, it's interesting to see what the inside of the market's doing. The primary hypothesis yesterday was for the market to balance above yesterday's high. If it dropped, I was looking for a drop down into the 59 area or so. But it ended up leaving a gap. We had Hypo 1 workout yesterday, balance, and then look for that first big rotation up, which we got. And then I was looking for the break of the week high that we had discussed. Ooh, what is that? The week high that was discussed two trader bites ago. We ended up taking it out. I expected a quick push through the week high from last week, and then I expected it to dip back down, and then I was going to look for a failed high attempt, and then rotation back into the morning's range. What it actually did is it chopped sideways. We had the impulse. We pushed through to 75, pulled back, had a lower high at 75, and then the market ended up executing Hypo 2. So this is the second time this week that we get Hypo 1, Hypo 2 uh, playing out in the same session. Hypo 2 was looking for a test of the MC point of control and the prior point of control, and then potentially a push lower, but to end somewhere inside of the last 2 days range back into balance, Monday, Tuesday range back into balance. What it ended up doing is it ended up pushing all the way through and having a bearish engulfing day overall. So Hypo 1 worked out in the morning. It pretty much stopped right here. From here, Hypo 2 took over and started selling, and Hypo 2 could not have been predicted. The sell-off could not have been predicted because it was spurred on by the FOMC minutes, meeting minutes. This is Hypo 2 here. Look for a test, a lower test, rotation down, and a target of 53, 55, and 53. That's where I ended. Here's what actually happened. The OS is right here. Here's what actually happened. We had this impulse early on, right there. That's a huge indication as to what's to come next. An impulse, you look for continuation, a continuation trade. We get our continuation to 75. The market has a deep rotation down. That was a turnoff there. Deep rotation down. I was starting to look neutral or potentially not neutral day type, but neutral as far as trend, or look for selling as it breached this mid, and then it walks itself all the way back to the top of the range, misses the high by a couple ticks, consolidates. So we have a nice big fat zipper here to contend with at a later date. Small zipper above it. This area presents a fair amount of resistance on the way back up at some other point. And then it starts to sell off, and then we get the move. This was a gap zone from the morning right here. This would have been marked as a gap zone, and then the market pushes to the mid of the gap zone right there, almost on the dot, pulls back into the range and explodes back to it, tests the gap zone again, and then continues lower. So very active session yesterday. Again, all of that happened right at the see, everything was normal. The auction was fairly normal up to this point right here. That's when the minutes came out, and you had this quick move down sideways, and then the market started digesting the information. It moved all the way down. We poked the low, the prior day's low, by a tick, rotate up, and then we continued. Yesterday was a not an orthodox trend day because the point of control remained up here. Um, so yesterday would have been a nice neutral extreme day, except it did not break the IB high. So what we saw yesterday is almost like an inverse. What we saw yesterday is almost like an inverse of what a trend day would look like. Uh, we spent a fair amount of time at the top of the range, so we found balance up here, and the point of control remained up here. And so this is a news-driven event here. So we look for the SOC or the scene of the crime, and we pay attention to the fact that 74 is where that the announcement came in, and that's our SOC at 74. With the point of control remaining up there, I expect that over the next week, remember Friday, tomorrow is non-farm payrolls. I expect, and mark my words, if history repeats itself as it often does with this product, I expect that we'll be back at the scene of the crime of this news within the next week. We'll see. I'd love to be wrong, because in being wrong, this means that we get um, more volatility, and we get a bigger movement to the downside. But this has left the point of control at the top. On a trend day, we would see this sort of thing. We would see the market balancing, then we'd see a break. We would see little high volume nodes build, and then we would see the point of control at the bottom quartile or the bottom quarter of the range as it balances out, and it's not able to do that. So we shifted price down, but we didn't shift value down yesterday. Value moved from the point of control down here to up here. Value is trending up. Price is neutral right now. There is no trend in price. So when we look at this on the market profile, the traditional market profile chart, which is not what I use volume profiling. You could see that we ended up breaking the weekly trend down, the one-time framing down yesterday. We broke it by taking out last week's high right here. And then we finished at the bottom. So here's what a trend day, a normal trend day, here's my point. A normal trend day is this. That little black dot right there, that's the open that day. A trend day opens, we test down, check for more selling, we'll look for buyers, and then when buyers come in, we start to shift up and we start to build these high volume nodes all the way up. And then when the market finds its sellers, it's exhausted and it sits sideways. That's when the trend ends. And then when that happens, the point of control shifts up to the high of the range, and we classify that as a trend day, and we look for a continuation move over the next day or two as the next setup, right? It's a very logical process. But look at this. If you look at this profile, it started right here. There's the open. There's a little black dot. It looks almost exactly. These look almost exactly the same, except this happened in the morning, and then we closed down here. So it's tricky to, when you first look at this profile, it does look like we trended up yesterday, but it is the opposite. We don't see that often, and that's why I bring it up. It is basically saying that yes, the market sold off yesterday, but if you're someone who's who loves shorts, I would not sit, I would not get complacent with this, even though you got paid yesterday. I don't have anything against being short. I'm just saying, don't get complacent. Don't start believing the hype about, it's over. We left a weak high behind again yesterday. We left the point of control up here. To me, in price, it shows that the market is for sellers, but in value, there's a disagreement there, and that's the point I'm trying to make. Okay, this is the advantage of using volume profiling. You get to see what's inside of the auction rather than just highs and lows, opens and closes. Here's where we are. So I've been charting this profile right here since this guy right here. Since we broke down on the Tuesday a couple weeks ago, the big selling day on the 21st, and all we've done is we've traded inside of the range here. Once we broke lower on Tuesday, we bounced for a couple days, and then we made our exhaustion low. This is the trend day that I was just pointing at. This is an excellent example of how an auction has an impulse pullback continuation, push, pull for a correction, and now we have been in this correction mode back up. It's kind of a classic thing you would see in a textbook. And what we've done, the point of this is to say, what we've done is we basically put in these high volume nodes there. So the point of control of this MC has been shifting quite a bit. Why has it been shifting quite a bit? It's because there's no consensus on value. In this region that we've been in, this area between 2318 and 2378, a 60-point range, the market has been actively seeking value and unsuccessful so far. It's for those market profiles that should have you know, your ears tingling or whatever, but for anybody else it might not make any sense. But the fact is the market is here to find value. That is its purpose. And it's unable to do so, which tells us that it's likely to continue to be actively rotating, having large rotations in this range as it continues to battle. In other words, sellers are having enough information to be convinced to participate in the auction on the sell side. Buyers are having enough information or have enough reason to participate on the buy side, and so these two are colliding, and that generates trade opportunities for day traders. I'm a day trader. I don't look at swing trades, at least not in the futures market. So this is where we are, and we are back. We are right back in the middle of where the point of control was before. So the point of control was here just a day ago at 47. It shifted up to 55 yesterday. So you can see here, I'll make it shift for you. So until Tuesday, it was down at 47. You can see this line dropped here, right? And then when Tuesday happened, the volume that we incurred on Tuesday shifted it up to 55. And so we are trading between, so yesterday's low is right up against the MC point of control where it was before. And then now we're boxed in by this MC that's above us at 55. This is the range that we've been in for quite a bit once we made the low overnight. And that's the structure and the context we're trading in. It's important to see that for what it is, okay? So here's the overnight session. The market shifted, made this impulsive move down. We had a small retrace. We expect, because of the way the market closed, the auction got stopped due to time because the session ended. We expect it to continue lower. There's your continuation trade. And now here's the pullback, push, pull, and another push, higher low. This is generally the opportunity I look for, higher low, and then now it's tackling the sell-off from the bottom. The sell-off mid is around 56.50, 57. If you recall from yesterday, I marked 56.50, 57 as a key area of support for yesterday's session. Of course, the news blew right through that, but I expect this to be an area of resistance this morning on a first test. I'm out of time. Let's cut this short here. I want to make sure you understand what I'm looking at rather than just watching a video and moving on and just taking the ideas. I want you to consider this in your own trading, no matter how you trade. This morning, I expect it to be fairly active. I expect a fairly wide auction. I'm looking for a responsive attempt higher. I'm looking for some resistance at 57 here on the first test. If it holds the zipper down here, then I expect it to have an impulse move to 2360, and I expect it to fight and then hold steady here into the non-farm payroll. Tomorrow is non-farm payroll day. It's unemployment day. It's the second most important release of the month. And so we'll have the higher time frame participants jockeying for position, for hedges, for whatever, coming into tomorrow's 8:30 Eastern time in the morning number. So I don't expect too much today. That's the primary hypothesis. If we get a quick move up into the overnight high, a push into 57, it fails back through the opening swing, guess what? Now I'm looking for this auction to continue lower. I'm looking for this to test a little bit lower and then come back and close somewhere in the range. But I do look for a lower low, and that's the main idea behind Hypo 2. I'm looking for a continuation lower to complete this auction. This is an impulsive move of 28.5 points here. an impulsive move that, if you discount the overnight action, is incomplete as far as I'm concerned. And so I'm looking for an attempt higher. I'm looking for a lower low. And then once the lower low comes in, we'll check to see what the order flow shows. A couple things. I know this is getting long. A couple things I wanted to show you in the order flow. Very interesting. Yesterday, if you look at what happened, here, I boxed things out. The key areas that I'm going to participate in, I boxed these out in Bookmap here, a very useful tool. You could see the collisions that occurred here, tons and tons and tons of collisions up here in the morning, and that became a key area of resistance right here. And it'll continue on. So this zone between 74 and 75 is key for a retest. It is the week high. Once it failed, we had a large number of collisions down here, and you can see how those participated. So as I shift this forward, you look at those boxes, and you'll see how those boxes provided temporary support and resistance. Here's what happened at the minutes. The minutes, you could see the white shaded areas is the liquidity. The brighter the number, the brighter the line, the bigger the offer or bid in that area. Look at how it turns black. Essentially, the market cancels orders just exactly 1 minute before the meeting minutes right there, and it stays black. It stays dead for quite some time. And here's a big hint here. As soon as liquidity comes back in, it comes in on the offer. You see these shaded areas right here, but underneath it is complete blackness. It's a black hole, and it continues to do so. You can see the size as the market approaches, the size canceling, and this is what I look for as far as continuation and failure. If the market starts to move down and the size starts getting stronger, goes from black to gray to brighter gray, brighter, and becomes white until it collides, it tells me that there's potential support. Potential is a key word here. But as the market pushes into those bids and they start to cancel like they are here, you expect continuation, and that's what we got yesterday all the way through. There was just not much support coming into the market at all until the market closed. So it's interesting to see that. I felt that it's important to see how the order flow and the depth flow works. Anyway, I'll leave you with that. This was a long one. I apologize. Good luck. The market opens in 4 minutes. Take care, and make sure you save some bullets for tomorrow morning for the unemployment number. It's been disappointing lately, but it's still worth a look. Good luck.